Hi again. So, hello everybody. It's Mike Bell here from the Armchair Training Floor. It is Sunday, the 4th of March 2018, and we are going to do a broadcast on this week's watch list. Now, we're doing this watch list especially just because we've been calling a few things for a number of months now, and particularly actually up to over a year on some of these pairs that we're going to be taking a look at today. But what I wanted to do was have this recording because I'm very keen on using the reference points of the video recordings that we do before we even share it to the normal public, so just so then it can reconfirm some of our analysis and we can have a reference point to look back to, so then we can always stay focused on our main goal. But what we're going to do today is we're actually going to go through the different charts from the watch list. I'm going to be talking about TradingView, and I'm going to be pretty much going back to basics to really explain what we're looking for on the different pairs that we're looking for. Now, what I'm going to do is we're going to start off with some of the cryptocurrencies. So we're going to be looking at XRP USD. Again, the reason why we continuously talk about XRP USD is simply because the maths behind it is very simple. It's just because the potential growth of this pair, with it being within the top 10, is far superior than the likes of Bitcoin, etc. And the way I'm going to explain that to you is by going on coinmarketcap.com. So you guys can obviously just Google that and obviously get yourself on here. But simply what CoinMarketCap is, it's an updated website which basically ranks all the different cryptocurrencies based upon their performance and also how much is in circulating supply, what their current price is, and the amount of volumes that are getting traded, and the percentage change within a set period. Now, if I look at the top 10 cryptocurrencies out there right now based upon the market cap, and the market cap is literally just a valuation that values the size of that particular market. However, if we look at the likes of Bitcoin, for example, to start off with, Bitcoin's already seen massive growth already over the last few years. Being, for example, this time last year, Bitcoin was $700 per Bitcoin. Now it's $11,000 per Bitcoin. So you're talking percentage growth within the thousands and within the tens of thousands, actually, potentially in the near future, but definitely 1,000% plus growth. Then we've reached highs of 20,000. So to think that Bitcoin's probably going to do from 10,000 up to 100,000 this year would be quite far-fetched compared to some of these lower valued cryptocurrencies that are 29 cents, 30 cents, $1, $200. To think that they're going to be valued within the thousands, that's a more realistic prediction just based upon psychological numbers in a psychological level. For something to appreciate from 3 to 30 in this market is far more acceptable rather than a 10,000 to 300,000 valuation, whereas the actual maths is exactly the same by the percentage growth. So that's just an example, but what we're looking at for the top 10 is we are looking at massive potential growth for Stellar, Cardano, you've got Neo as well, and Ripple. They're the main growers that I see for this short period. But we have got a watch list of the biggest growers that we expect in 2018, and so far, even though we've had significant pullbacks over the last 6 or 7 weeks, we are still going to see that. If you look at today, again, you've got a 10% increase in price on Stellar, but definitely Ripple is one to watch in the very near future, because this one should be exploding, because you will see some news released within some point in the next 2 to 3 weeks. We're expecting this around March the 21st for the real push to begin. But what we're looking at doing is locking in a few positions right now while we're in a place of low liquidity. But we're going to go back to the chart so I can explain that to you right now. So if I go on to XRP USD, I'm currently here in trading view on the 4-hour chart. Now, to explain what we're looking at is you've got, I'm just going to zoom this out to the daily. What we've got here, guys, is since December, since we called a massive spike up from 24 cents, if you go on our Armchair Trading Floor website, and if you go on the members zone, you'll be able to see the video analysis of how we explained this massive explosion right here, and we nailed that one to the T. Obviously, some of the members that were involved from December seen the gains, and we made a ton of money just on XRP USD, and the same thing is due to happen again. Now, what we've got here is we've got the Fibonacci retracement tool. Again, we've done the video on this, but the different levels, we've got this 23.6, 38.2, 50%, 61.8, 78.6. These are your retracement levels from your low point, which is highlighted here, which is your low point, to your high point, and that shows the percentage of how much price is pulled back. So a midpoint, a 50% retracement is here, so at $1.8, which is quite key, because what we are looking at on a long-term basis, imagining that this market is going to be moving sideways, is we've got a level of support right at this bottom, and we've got a level of resistance up at the $3.4 where we've spiked up to. However, what we're looking at on XRP USD is we've actually got this spike right here. So if we look, we've got a spike that we received in February the 6th, price spiked down to 0.55, which was the lowest point of the year, and then we had a strong bounce, which indicates that we've now created a potential trend line to follow. So if I zoom this out on this trend line, what I've done is I've literally just got the trend line to from the low point, extended it through, I've extended this trend line through that skinny wick which is left right at the bottom, and I've literally just extended this and then just let that one fall right there, because what we expect is every time that price touches this trend line, we are going to see the same thing happen again. So if price comes down to this trend line, we should see a nice strong boost up, and again if price hits over here, a nice strong boost up, and this is going to be a very significant trend line to follow throughout 2018, as we obviously look at what price is going to do in the next 3 to 6 months. What we've also got right here is we've also got a level of minor resistance which which we've now identified as a minor level of support. So what we've got is price breaking above, and we've got the 78.6 region acting as this level of support where we've had price spike down, where we've obviously highlighted here. You see these two skinny wicks, these skinny lines. That indicates that price got down to that level on that particular day and then shot back up. Next day, price got down to that level, shot back up and closed at 1.18, which is another key level that we're going to highlight. But what we're looking at here is 0.85 up to 0.88, which is a strong level of support for the near future. And again, price obviously broke through that level, but we are currently sat at this 0.86 level, which we've done since the 22nd of September. Now, what I wanted to do was just literally swing into our Facebook channel here, our Facebook post that we did on the 18th of February. You can see this February the 18th, 2018 at 3:29. We're going to explain this at the back end of this year as a reference point. Now, for all of you members, we're not going to upload this watch list to the free zone or to anybody else, but we're going to have another video where we're going to look back at this video and explain this particular roadmap. Now, some of you members that have got us on Instagram, or I've got my personal account on Instagram, have asked me about this, and I've obviously explained it, but this is the roadmap that we see for XRP USD. Now, which we did on the 18th of Feb, so 105, 1.14, 0.86 to 0.9, so 0.88 to 0.96, 2.8 to 2.24 to 5. This code correlates to the algorithm that we are predicting XRP USD is actually following. Now, these numbers play a key role because what we feel is these are the key turning points for this pair, XRP USD. Now, what you really should be doing is taking a look. So let's take a look at what we should expect. And if we go back to the 18th, we said 105, which was here. That was the low point, 1.14. And if you notice, let me just zoom this in. So we posted this on the 18th of February at 3:29. So price got down to 105, and you can see the price over here on the right hand side. So the lowest point was 1.05. Sorry guys, I think there's a better tool to use than that. Price label, here we go. So 105.10, and then we've got 1.14 or 1. I hope you can forgive me, just under 1.14, and then we said we're looking at the next range, which is going to be 0.88. So if you notice, we're around this region of 0.88. We actually had lows of 0.85, but we weren't too bothered because it's still within our resistance range. Now the next key level that we're looking for, because we are expecting a massive bull run just around the corner, is going to be $2.8. Now what we should see is if we break through and break on the upside of these moving averages right here. I'll just delete a few things in a second. So we've got this blue line and we've got this red line. Now again, for you new members, don't worry if this is all a bit fast for you, but these are your moving averages. The members that are obviously been with us for some time now will know that the signal is as soon as these moving averages cross, then you will get a strong move either to the upside or to the downside. So let's go back in history and let's go back in time and see if that's actually been respected. So we've got here moving average crossover, price is shot down. So the blue line is crossed underneath the red line. Notice that blue line is crossed through and went to the underside of that red line. Strong move down. If we zoom in on this section here, you can see that price actually, the blue line went above the red line, so price moved up, but then it went underneath the red line again, which is what sent price down. So what we're looking for next is this blue line to come and cross to the north side of this red line. So if we get the moving average, let me just get this line on here. if we get this moving average to do this, and I'll just paint that in blue, that is going to be a signal for money to literally plow into the market, and then what we will see is going to be a strong move up to the upside, just like what we had in December when we had this massive bull run. So if we zoom in, and I'm currently in December right now, so if you look here, blue line goes through and goes above this red line. We've got a nice moving average crossover, and then look what happened from there, from 0.22 all the way up, all the way up, all the way up, all the way up, all the way up till we hit $3.4. Spot on. So that's basically what we're looking at for XRP USD. My charts have just done something a bit funny right now. Never mind. But yeah, that's what we're looking for on XRP USD. If we notice, or if you take a look here, obviously we were trading in a very low range, but if you look, the daily range, we're on a daily chart here, if you look, that range, we were literally moving pretty much sideways in comparison to where we are now, because there's a lot more volume in the market, meaning that there's a lot more money being traded on a day-to-day basis. So your daily range used to literally be 2 or 3 cents on this pair, where now we're looking at moving to $3 or $4 on an average day, and potentially set $40 to $70 on a good day. So if we look, we were literally trading in a low. We were literally moving sideways for a little while just before that massive explosion up. Now if we look at where we are right now, again, for me, history is definitely repeating itself, because we're literally moving sideways and have been for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So what we should see is price just to continue to just move sideways, 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 and as soon as we break through the targets of 0.96, which we obviously highlighted in that image on our Facebook channel, if we look, we actually hit our daily high, which is the first target, which was 0.96. Then we're going to have a dollar sit above a dollar. Once we break 1.20, we are literally confirmed that the bull run has started. Now we're expecting this 1.20 move to be broken by the 20th of March. What you've got is you've got some fundamental news happening on the 20th of March. You've got the G20 summit, which is basically all of the different governments basically going to sit down and discuss cryptocurrency. And what we should see is everything's going to be fine. They're going to bring out regulation, but regulation in this instance is actually going to mean a positive thing for the market. Usually, any time that a market gets regulated, price literally plummets, 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 and goes to the floor. However, in this instance, I believe that regulation is the best thing for the market, because you're going to have a lot of Ponzi schemes eliminated, and then you're literally only going to have the real adoptable cryptocurrencies available, and the ones that are literally going to be the ones that are going to create the new wave of wealth for this new generation. So that's what we expect for this particular pair. For us, we've been holding positions for about 2 weeks. Again, as we mentioned, from this 0.86 level, what we should see is this. That is literally what we are looking at. We could get price pull up to the 102 level, a final manipulative spike down back to this 0.86 level, and then boom, off we go. We're not too bothered for now because we've locked in quite a number of positions, and this is a very safe zone to be in because we are at the bottom. If you guys that were in some of the older members that were in the other Telegram group known that we told you guys to lock in positions here at the 0.75 level and the 0.60 level. We told you that on the start of January. If you did, you will be doing very well right now on the trades just for the long term. But literally now is the final point for XRP USD before it completely takes off towards the middle of 2018 and the third quarter of 2018. That's where we are for this particular pair. So buy. The next one is going to be Ethereum. Ethereum versus the US dollar. Again, Ethereum's a good pair. What you've got is Ethereum's literally done what most of the other cryptocurrencies have failed to do, which is actually create and sustain on its own terms. Because when we had the pullback from January, Ethereum was one of the ones that pulled back the least in comparison to all of the other cryptocurrencies that pulled back from the December spike up. And what we've got is we should see Ethereum hit highs of around $2,400 at some point in 2018. And the reason why we're calling this is simply from this trend line, and we should see another surge up when the money starts flowing back into the market as well. There are some fundamental reasons why we believe that, but on a technical note, what we should see in the near future is going to be, again, on a daily time frame, what we are waiting for is waiting for price at $860 where we are right now to break above this moving average. So to sit and close above the moving average somewhere within the 900 to 950 region, that'll give us some strength. We should see another spike up to the first target, which is going to be 976,000, and then once we've broken that, our next target is 1,200, and I'll explain what we should see right here. Target 1, target 2, and then we've got a final target 3. The way we've done these targets is simply what we've done is we've targeted the resistance zone, the key turning points. If you notice, we had price spike up, pulled back. So this is a key level to watch. 1,400. Again, price spiked up here, pulled back. So 1,200 is another key level to watch. And then finally, 975 to 900 to 1,000. Price pulled up and turned, but we had less retracement each time that price actually turned. So that gives us some confidence that for Ethereum, what we're looking at is we are going to see a move up to 960. We're going to pull back, sit above the MAs. MAs is moving average, spike through, and then hopefully get to 1,200. Pull back to about midway 1,000, and then we should see some significant move up to 1,400, then finally hopefully a nice massive push up to the 2,000, 2,400 level at some point within the next few months. We're anticipating this moves to last till about July the 19th, July the 18th for all of these crypto bull runs before something special is going to happen to take us into the final leg of 2018. Now, the next thing that I wanted to talk to everybody about is going to be how to load up your positions, right? So what we're going to talk about is we're going to talk about risk reward. So we're currently right now, so I'm going to use Ethereum as an example, and I'm going to use the numbers of £1 per point. So if we look over here on the right hand side of the screen, you can see that Ethereum is currently valued at 863 Ethereum coins, $863 per Ethereum coin, which means that every time that price moves up, then you're going to get that's valued at $1. So 864, that goes to $1 per point. So I'm going to use the example of £1 per point or $1 per point. Now, if we take a look, what we've got is a potential short-term bullish trend line for price to go up. So if I just draw that on from here, so what we should be looking at doing, bearing in mind that if we have a bullish bias, bullish means that we expect price to go up, what we're going to be doing is looking at trading up to these targets. Now, what you should look to do on all of your trades and all of the new trades that we pull out on our signal and alert group is, what you should be doing is getting your risk reward right on each pair, but taking 4 positions. We take 4 positions per pair, and the reason why we do this is because the most common reason people lose money in trading is simply because they close a winner too early, or they leave a loser to run for too long. Yeah? Now, what we're going to be looking at is, I'm going to show you on TradingView an example. If we were to open up 4 trades right now on Ethereum, what you would do is we would have our stop loss at just below the previous low. And the previous low point here is 785 dollars per Ethereum coin. Okay, so we're just below the daily low. So I'm going to have 4 trades running, and I'll just give an example of what you're going to be looking to do on this pair. So this is what a trade would actually look like by using this method. So entry points are all the same, so I'm just showing you 4 different levels of risk reward. What you're going to be doing is you're going to be looking at your resistance levels. Obviously we highlight the resistance levels, which are our targets. You've got resistance level target number 1, resistance level which is target number 2, and resistance level target number 3. Again, this is a buy position for Ethereum ETH USD. So what you're going to be looking at doing is you're going to be looking at taking 4 trades. Trade number 1, your take profit is going to be set at 973. Trade number 2, your take profit is going to be set at 1,200. Trade number 3 is going to be set at 1,400, that final resistance level, and then trade number 4 is literally going to be left all the way up to run. So you've got 4 positions here, which totals that you're looking at £4 per point on Ethereum ETH USD. Now, obviously, 4 times the reward is also 4 times the risk. Now, if we have a look here, you've got literally assuming that you're working on £1 per point, what you've got here is you've got 117 point reward for an 86 point risk. So if I work that into real money terms, on this particular trade you've got an £86 risk for this trade, an £86 risk for that trade, an £86 risk for that trade, and an £86 risk for that other trade. Obviously what you've got is 2 seconds. So if you're running 4 trades at, let's say, £86 per one, your total risk on that on this whole trade is £344. Yeah. Now, if that risk is a bit too big for your account size, obviously keep the trade running, keep the risk reward running the same, but just lower your risk. So maybe you'll do 20 pence a point, maybe you'll do 50 pence a point, maybe you'll do 60 pence a point. So then it's a comfortable level of risk that you're doing. You don't want to risk too much per point, so it's crucial that you have the right level of risk for this particular trade. Now, for me, what I'm going to be doing on Ethereum is assuming that we've got this trade runs out as we expect it to do, is if we hit target 1, which is take profit 1, okay, we would literally hit the first target of 982. So then that trade gets closed automatically because we've hit take profit 1. What we do on trade 2, 3, and 4 is we simply move the stop loss up to break even. So assuming that price is now moved up to take profit 1, what we want to do is move all of the other trades up, so then we are literally risk free on all of the trades. So we are currently sat at plus £112 there, which has been banked, plus, again assuming that we're using £1 per point, plus you've got a floating P&L of another £360. Okay, so total profit which has been running is £480. However, you've closed off 120 because you've now only got 3 trades running. So assuming next that price obviously does what we expect it to do, bounces down to this trend line, but then reverses as soon as we hit take profit 2, so we then close this trade. So then we were at a further 100 and so then we're at £350 for that trade because price is now at this level, which is take profit 2. So then we've banked £120 here, we've banked £350 here, so we flow in profit, which has been closed off, is £470, plus we've got a further 350 and a further 350. So we're currently sat at £1,000 profit on this particular trade. Again, assuming price pulls back and does not hit our final target, okay, which is our target 3, just letting you guys know what can happen as well. What you should do is actually, as soon as target 2's been hit, what we then do is move our stop loss up to target 1. So again, we're even more risk free in the trade. So then at any point, if the trade comes back down from this level and actually comes over here and stops you out, then you still bank a further £112 and a further £112 on this particular scenario. So I'm just going to write the numbers on here. Text. So plus £120 on that first trade. Plus £350 on the second trade. we've moved our stop loss up to the target 1. So assuming that price hits target 1, we've closed off on £120, and the same thing again here on £120. So we've currently traded a profit of £710 on that trade, just by having a trading plan and a strategy for this particular trade. So having 4 positions and then moving up, you've only actually hit target 1 and 2 here, but we still managed to close out a solid amount for these trades. Assuming that the plan goes exactly how we think it's going to go, and again, we should be looking at this figure will change, and that'll actually be 530. So if we hit target 3, again, we close the trade, we've banked £120, 350 and £530 by catching that particular move. Catch that move, and then what you've got is you've got your final trade that we simply just leave, because we know that most traders will close their positions too early. So we'll literally just let this one run, and we'll move our stop loss up to our target 1, which is this £120. And we'll literally let this run. If price comes down and hit our stop loss, again, we've took 120 quid from the trade. If it continues up to 2,400 that we expect at some point in the year, happy days, we would have literally banked a further, I'll just work this one out for you. Want to play ball, you're looking at 600, yeah, another £1,800 if that gets up to the target level that we do expect it to hit, which no doubt it will hit by about May, June time. But simply trade like this and you will be fine. Just understand that you're not catching a linear direction, you're trying to catch the entire move. And if you trade like this by trying to catch the entire move, then number one, you're going to protect yourself and you're going to protect your account, because that's how you apply correct risk management. So then you'll move your stop loss up to break even, just move it up to further targets, up like that. And obviously the reverse goes to if you're trading on a short as well. The next one that we're going to be looking at is GBP USD. Now the market opens in an hour and 15 minutes, but what we're doing is actually going to be the exact same thing. What we've got here is a bullish flag on GBP USD. Again, you guys that have been members with me for a long time will know this trade. You'll have seen this. We've been calling GBP USD, calling 150 since 2017 after Brexit, where we had the lows of 1.18. So we're literally pips after pips after pips after pips up. Just by literally just understanding the market and understanding that we've been in this ascending channel for a long time. Again, go back through our Instagram page, you'll see the charts that we've posted, but we've been calling this for a very long time, and we're approaching a very crucial point. We are very aggressively bullish on GBP USD, so we will see further upside. We've currently got a bullish flag that we're looking to trade off again. So we've got that bullish flag pattern. Looking at short-term targets off 1.40, 1.42 and 1.45. 4 to reach highs before exceeding up to the crucial 1.50 level. Obviously we've got dollar weakness, that's quite obvious. So for GBP USD, what I expect for this particular week is I expect that we are going to see some form of pullback. If you go on the YouTube video of our watch list last week, we call this to the T. From when the market opened, we were supposed to pull back to about the 1.38 level. Yes, we went short an extra 50 points, but we weren't too bothered. But if we look at the hourly chart on GBP USD, what we've got is we've got that moving average crossover. Now, what I expect for the open for the week is we're going to see price actually head up to about 1.3860, which is that resistance level, and then we should expect further shorts back down. I think that we're going to break this trend line that we've got to send a fake move, and we should actually see price continue on its downtrend down to 1.366 level. Again, what I'm going to be doing is two things. I'm going to be taking a buy position at 1.3750, and I'm going to have my stop loss just underneath the previous low, which is over here, 1.37, and I'm going to execute this trade as if it was going to happen. Now, what I'm going to be looking for is as soon as I'm in a decent amount of profit, probably 30 to 40 pips, I'm going to be moving my stop loss so then I'm risk free. This is my plan A for this particular pair. Plan B is if we do this move but then we still break to the downside, then I'm going to be looking at a buy position at 1.3660. Now that is last year's highest point that we got to. So we broke through this year to get to the levels that we are at right now, but I'm expecting us to potentially, if we fail to respect this bullish trend line, to actually come back down to the resistance level of 1.366 for continuing to do what we expected, which is hit target 1 at 1.40, 1.42 and 1.43. So mega amount of pips. This is a big move as we have the final push that we hope for GBP USD up to 1.50, which is going to be a massive crucial level for us. No doubt we're going to see some news that Brexit is when ticks up at that point, once we are at 1.50, because that's when I'm going to be looking at a strong rejection and a strong reversal point, and a big sell from this level all the way down for GBP USD. Should we go into Euro? Yeah, I'm going to go into Euro GBP now. Euro GBP, what we expect is we expect some further upside on this pair. However, what we're looking for is we're looking to complete this ABCD pattern, which is going to be, we're almost there at 0.8978. So what we should see is further upside to look, which is going to be a buy pretty much Monday, Tuesday, as soon as the market opens, to hit this 0.89 level. Then we should see price pull back, and then I'm going to be looking for a buy position at 0.8863. But I'm obviously going to keep you guys posted before we complete to the levels of 0.90 to 0.91500. So this could potentially be a big move. We need to sit a bit patient on this particular pair. This move might happen at the back end of the week or even next week, but for now we're either looking at a short-term buy up to 0.8978, and then we're going to be selling Euro GBP all the way down to 0.8860 before any further reversal signs as well. That's what we are looking for. The next one is going to be the members zone. So if I take you all into the full members zone, obviously keep on checking in the members zone, get yourself educated. We've obviously got our cryptocurrency watch list on here, our 34-page report, which obviously explains the watch list. This is for anybody that's looking to buy cryptocurrencies and hold them for a long period. But in the members zone, again, what you've got is you've got some videos here, tutorial on how to use TradingView and how to apply correct risk management. So if this comes up, obviously the video is just hosted online. So 34 minutes, just us explaining what to do with TradingView and also utilizing some of the PDF modules that I've obviously done and showing you how to actually put this in practice. So we talk about support and resistance, we talk about Fibonacci retracement, we talk about how to enter a trade as well. So definitely worth checking that one out. The next one is going to be the PDF training module. So again, on GBP USD, we talked about the bullish flag. Again, we've got PDF modules here on how to identify bullish patterns. So this is how you trade the bullish flag. Measure the distance. That's your projected length, projected target length after we've broken out. And then obviously some examples of how to trade that bullish flag. And then the request to pair, we want to see your charts. Our job is to make you guys very independent, so to trade like how we trade and set up your charts like how we do. So what I do want to see maybe over the next few weeks is I want to see you guys use this request to pair feature, get onto TradingView, do a chart analysis, and then save it, save the picture, take a screenshot, take a picture of the chart, then go on to the full members zone, click on request a pair, pick the pair, submit the form, and then also send us a picture of that form that you're obviously looking for. So again, you can put USD, JPY, Aussie dollar, etc. on there as well. And I think that is pretty much it for today's broadcast. If you guys have any questions, please let us know. Going back into XRP USD, we are looking at some moves on this one. What we should see in the short term is what we expected. Price to move up, sit around this level, this $1 level for a little while. March 21st, boom, and then we are literally go. So lock in your positions from now. I know that a few of you members have locked in some positions. Fraser, Sam, I don't know who else has locked in a few. Phil, you've locked in a few positions. Just hold on for dear life on those positions. You will be well paid off, trust me. The next one is going to be, we've got two more announcements for you guys. Thank you very much for obviously taking the time to listen to us. What we've actually got recordings of is, we're very pleased to announce that we are launching a video series, which is basically a video series of a video course just to explain a bit more on trading, and if you guys are obviously interested in it, some short videos on how to obviously do your entries. So as mentioned, entry, stop loss, take profit 1, take profit 2, take profit 3, break, retest, continuation. Again, some more content on there, and hopefully you guys will enjoy these videos. Again, we're doing this video course, but what our job is going to do to get you guys very independent on the different charts as well. And finally, we will also be launching something special for you guys that have obviously been members for a little while now. So anybody that's been a member for 6 months as a minimum will get the option to pay in cryptocurrency. We are now taking payments in cryptocurrency just for your membership, etc. And there's actually going to be a discount for anybody that's been with us for 6 months or more to pay within crypto, so it'll actually be cheaper for you guys. But we're switching over. We are very invested in cryptocurrencies at the Armchair Trader. I advise that you guys do for the long term. It's different to trading because you're literally buying it to watch that asset just grow as price grows. But again, we're looking at Ripple, and a few other select few that are going to see some massive growth in 2018, 2019, and more importantly, we're holding on to our positions for until 2020. So yeah, thank you very much for your time. Have a good week. Buy some XRP and just continue to obviously learn and look on the charts as well. The final one, I know I keep on saying the final one, is we should be hopefully seeing some news on, I know I keep on banging on about Ripple, Coinbase launching Ripple some point in March. So if that happens, we are going to see a massive explosion, actually even bigger than the explosion that we've seen here, where you had, well, I think it was a 35,000% or sorry, 3,500% increase in price. But we will see a new higher high being created off around about $5 for 2018 and beyond, to be fair. That's what we're looking at. $5, $4 short term, $5 at some point, and anybody that's got the watch list will know exactly where we are looking to end up by 2020. So thank you very much. Take care. Good night. Goodbye.